Hello fellow traders, welcome to another episode of the series. Thank you very much for your support. Like, subscribe, leave a comment for the YouTube algorithm. This is another tutorial video on technical analysis, so today's episode will be a bit longer. Unfortunately, there are thousands, millions informations about this topic, and I will try to make it the shortest as possible, let's say. So first, we need to give a small definition on what is technical analysis. So if you search on Google or Investopedia exactly gives this definition that technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activity such as price, movement and volume. Of course, we are giving another much smaller definition. You need to identify repeatable pattern behaviors of the market for a specific period. Of course, the idea is not new. The technical analysis is not new. It was introduced by Charles Dow in the Dow theory. This goes back to the 19th century. I won't go into so many details because, as I said, this is a huge subject. Technical analysis, it's a very important tool, let's say, that will help you when you are analyzing an entity, an asset, everything that you are willing to trade, to see the opportunities. And of course, because we will use many statistical data to build our method, our strategy, let's say, we have also mentioned that technical analysis is not it's one of the many tools that we can use. We can use also fundamental and sentiment analysis and make a combination of all these three, because as we will keep analyzing, we will see in the future, and of course in my videos, that trading is not so easy as many people expect or many people present to their videos. They are just adjusting an indicator, they are just putting another indicator, and they are trying to convince you that this is the way that you can make profits. But unfortunately, it's rather the opposite. So what are the basic elements of technical analysis? First, we will use indicators. I have analyzed all kinds of indicators: lagging indicators, oscillators, volume, trends, lagging, leading indicators, and so on. So I won't go any deeper into this. I mean, I won't analyze the indicators because if you check in this channel, I will try also to leave in the comments or in the description. You can find every single indicator that is out there, even if it's a very popular one or some experimental indicators that I will present in this channel. So the first part, let's say, of technical analysis is indicators. The second part, price trends. We all know that even with a simple look in a chart, in a diagram, it doesn't matter if we are trading an entity, it doesn't matter if it's a chart or anything that has to do with chart, you will see that the market loves trending. Most likely, prices will continue to follow the trend, higher highs, higher lows, and so on. This is based on human psychology. We have analyzed that. Of course, market moves with waves. So this is something that it's already mentioned. I won't get to some details like Elliott theory and so on. Chart patterns. I have analyzed also in this in one of my episodes. It's a bit huge. It's like 50 minutes, 1 hour. I'm not sure. I'm analyzing every single chart pattern. The most simple ones that is referring to some candlesticks and how you can identify them and how, of course, you can use them in your trading. And some other a bit more advanced, like head and shoulders, triangles. Trust me, the theory, the technical theory, let's say, Most likely, I won't refer it as a theory, but I would say method. I think this is the word that better describes. He has evolved so much until nowadays, even though the statistics remain the same. So probably it's not the most accurate tool to use. Use it just as a signal, and we will see later on this video about the criticism for the technical analysis. But at this moment, we need to check the basics. So there are the simple chart patterns like triangles, pennants, some basic double tops, bottoms, head and shoulders, and so on. The list is big enough. A bit, some of them they seem a bit more advanced because we are using the golden ratio propulsions. But the problem, we have analyzed the pros and the cons from every single chart that you probably gonna see here. Also, some bats, some crabs, some sharks, animals, and so on. Some short definitions that we are giving that will help you identify a pattern. There are traders that trade a lot with this pattern. I mean, they are using a lot technical analysis, and I will explain you why. Because this is also the part of the criticism that a technical analysis has. Because in the end, everything is depicted in the chart, but I will give details later. The most common part, let's say, the fourth part, I mean, we try to summarize the information, is by using support and resistance levels. Why we do that? Market is psychology. What does this mean? I mean, how we can interpret that, how we can analyze that. Let's say that something is trading and someone is willing to buy at a price of 100. Eventually the prices goes there. That's why you can see that this is the first resistance level. So the prices goes there and immediately start to retrace. But again, the market builds momentum and it goes to the same price again. Most likely, that's how we form the double bottom or top that we have already discussed that. And the prices will retrace again, but the market, it's still willing to go higher. The buyers are significantly more. And this is depicted in our diagram. So what happens again? The prices goes to the previous resistances and break the lines, break the prices. Now, consumers are willing to buy in a higher price. So how this works? Previous resistances becoming previous supports. And how is that? You might see that if you are analyzing some new markets. I will give an example of the cryptocurrencies because I'm analyzing these markets. I do not trade them because it's something new that I still, at least I don't feel confident going into a trade. I have explained that you need to observe your entity, and in the end, if you are not able to go into a trade, you don't have to do it. So, but if you look at the charts, because they are completely new, you might observe that there are not even previous prices. There is no previous histories. I mean, they are keep going higher without having any previous data. So this is, for me, creates the uncertainty. I'm not able to predict, let's say, or evaluate correctly or going into a trade. Of course, you might also see in my account that we are trading for almost a year now that there is no trade on cryptocurrencies. I have nothing with that market. I wish I could. I wish I had invested back then, but this is something that it doesn't have to do with my character as a trader, because I do not regret. You cannot regret for something you didn't invest back then. It's like regretting because you didn't got the lotto numbers. I mean, you didn't know that. And also, it's not a new market. We will make a video for crypto. Of course, I won't present the video, but I will bring someone that it's most likely not an expert, but he's trading for many years. He's also producing, I mean, I don't know if that's the correct word, mining or whatever. Anyway, I got a bit away from the main conversation, but support and resistance level. Now, the previous resistances, remember that I told you there is a price of 100. Buyers keep buying that. The buying pressure, remember, they are not all traders. We are not all traders. I mean, sometimes we need to buy or sell an entity because it's necessary. For example, if I go to UK, I need to exchange for pounds. I don't care what will be the exchange rate at then. I mean, that's a simple transaction that I want to do in order to shop or do everything is related with my expenses. So the previous prices, our resistance was in 100, and now what's happened? The prices retrace at that point at the 100, but the market is keep pushing higher and higher, and this is the psychological resistance. We will also check some movable support and resistance, but I'm trying to summarize the millions of information that is related to technical analysis. So consumers are I will call them consumers. We are not all consumers, but we give that definitions, but are willing to buy, let's say, at the previous price that the prices got higher. So let's say that at 100 the prices go higher. So at this point, people psychologically, they are building psychological barriers in their mind, and these are also depicted in diagrams. And imagine that if you are, let's say, a huge company that buys bottles or buys everything, you are willing to make a buy at a better price. Of course, please, I don't want to hear some comments like, yeah, okay, we are doing agreements with 5-10 years and so on. No, we will keep it tight, simple, so we can all understand the definition. So, as I said, technical analysis is very important part. I mean, it plays a huge role when you are going at this part that you need to evaluate a situation, evaluate an asset. I call them entities. Everything is included there because they have their own behaviors, and this is the reason that I am using this definition. People that are able to identify first the market, people that are able to identify first the move are most likely to be the most profitable. Now, a technical analyst believe that everything is included in the chart. What does this mean? I mean, this is the major criticism also to the technical theory. I mean, you cannot expect a support line or a resistance line or some trends or some fancy patterns to predict the market. And of course, this comes to fundamental analysis. For example, if I'm examining a company, I will check if this company is making investments, if acquires new assets, if the market is good. I mean, if it's profitable, which is very important. Of course, we can adjust these numbers, I can guarantee that. But the main idea that we can fundamentally check some basics. They are not accurate. I will give an example of penny stocks. You might heard of them. People are, maybe you are not familiar with the definition, but there were some huge companies that finally their stocks dropped down significantly into cents. This is how the market is irrational. So do not expect, I mean, if you do a very good basic fundamental analysis, and of course you have some idea of economics, microeconomics, let's say, at a level that you are able to identify a market, a company, an asset, a commodity, and so on. But you need to understand that the technical analysts believe that everything is in the chart. So if a company makes profits and evolves and start winning a big share in the market and so on and so on, this will be depicted in the diagram. So actually, this also saves time from a simple perspective. I mean, imagine scanning the markets above 1,000 shares or above 150 major pairs or anything that you want to trade. So this will give you a faster view, let's say, to scan the market. And of course, this is how it should be used. At least this is how I believe. We are not mentioning the indicators because we have analyzed them, and I gave many examples and how to introduce the indicators, how to induce them into your strategy. But the main idea is to understand how the technical analysis will help you to evaluate easy and fast something. That doesn't necessarily mean that you will dive into the trade. The history repeats itself, but this is the major criticism also, that the negative aspects of technical analysis repeat itself, but not with the same way. We know that the market moves with waves. We know the cycles. We know that there are ups and downs, but can you predict the next one? Can technical analysis help you predict the next one? No, the answer is no. No one can predict the future. However, there is a significantly small propulsion, say, or a few people from out there that are trading that are able to make a more accurate predictions. But you need to understand the idea, the concept. You don't want to be accurate all the times. You don't care about that. That's why when you are analyzing your strategy, you have a risk-reward ratio, money management, and so on, which are more important than being right, because I have proved to you that in my videos and in my tests, in my accounts that I'm presenting you every time. So the important part is to identify your entity and being able, by using this technical tool, to understand that if this is the correct moment, the correct time, the correct period, either to go long or short, this doesn't matter, of course, but this is you most likely are willing to go with the trend. Of course, in the second part of this video, because I have some issues with theory. I mean, I want theory to be tested and show to me with tangible evidence in some practical examples, like where can I trade? Can I buy here or can I sell there? We will do that in the second part of the video. That's why I told you that this video might be a bit longer than usual, and everything I have explained you that earlier. Everything is in the chart. I include that twice, but this is how it should work. That's how a technical analyst will defend the theory. In my opinion, you should be able to identify also some fundamentals and some sentiment analysis. You should be aware of this in order to make a safest, let's say, a conclusion, either if you want to trade or not. And keep in mind that you will see some people out there that are using very fancy indicators with colors, and they are drawing some lines, and they are pretending to be some gurus and so on, and eventually your diagram will look like this, which is impossible to trade. It's full of trend lines and support and resistance level and Fibonacci and golden ratio and triangles and whatever, because the market is moving chaotically. So there is no guarantee prediction, there is no guaranteed trade. For sure, 100%, 100 million%, there are some systems. I call them systems, even though I should say strategies, and I also agree with the idea of strategy other than the system, because a system is something more automated. I'm already against bots. I have said that many times. I will also say that once more. So I hope I didn't say too much. Pretty much this was the first part from this video. Now I will go to some real markets. I will give a tangible example, let's say, of technical analysis. I will open the MT4, the Euro USD. I do not prefer that pair. I don't have anything against that pair. I mean, I think it's my worst trading pair. I think I'm not sure. It's the pair that it's my least favorite pair, but it's the most popular, of course. Also in the Dixie is one of the most important. Randomly, I would choose the Euro USD. Let's say. What we're gonna do here? We will start analyzing. As I said, we'll use the 1 hour chart. I have nothing with that time frame. I'm just trying to do it a bit more randomly. So in time, I will show you how we will specify that, how we'll detain, let's say, how we'll make it very specific. And of course, I will show you the negative aspects of technical analysis, because at the end, our diagram, our entire chart will be so complex and hard to read that you won't be able to determine the up or down or take a decision. Now, let's go to the 1 hour chart. I will zoom out a bit. So I see there is a channel here. This is the first part of it's immediately recognizable. So I will insert, let's say, a simple square, not square, but a simple rectangle here. So this is our zone. As I can see in the 1 hour chart, we are starting a downtrend at this point. So most likely I'm willing to go on a short position. Now let's do our traditional swing high, swing low. Let's use some Fibonacci levels. I will mark them also to 50. I do not use 50. I'm just doing that for the video. So just keep that in mind. I did that some major. There are also some other key prices. Now someone will already spot our first price to enter, most likely at this point. But let's also make a trend line, let's say, because we are on a downtrend, and we are going to use some technical analysis tool. I will take that line here, so to help you. We already have an issue here, because someone would take a short trade here based on that line. That's why we said that you cannot based on these simple lines and so on. So you understand by how, if you apply that in some real markets, how you're gonna see the problems. Of course, I didn't open any indicator, so let's use them. I will use the basic ones. For sure, Ichimoku. It's a very popular one that I'm going to use. Of course, this did my chart a bit more blurry, let's say. And this is when the problems would start arising. Let's move a bit to higher time frames. Let's go to the daily. So here we might see a potential match of these two indicators of Ichimoku, which is most likely you're going to hear it, and some Fibonacci level. So most likely I'm willing to take a short position at this point. But let's check on even daily. We are on a downtrend. Now, do we have any fundamental idea about the Euro USD? We do have. If you are checking our videos and our analysis, you would already know. So we have already that. I will also use one of the most basic indicators. We'll use from custom, and of course it's the RSI. Now let's see what RSI will give me. We were on the 1 hour chart. The RSI is on 70, so the RSI is already showing me that I could sell at this point. But as I said, here we are having a channel, the price is bouncing at this level. So there are two possible scenarios. So either the prices will jump higher, either the price will go lower. So someone would trigger a buy order here, which I wouldn't recommend. I would expect a sell order somewhere at this point. And now we are using the RSI. I will put another indicator to make things even worse, I think. I will use the MACD. I try to use the most favor. Now, we still don't see any divergence because we say that these are the most important tools, maybe at this part. But the reason is because that's why the prices start ragging at this point. So if I go to the 4-hour chart, we are still good. We did a small indicator. We did a small adjustment here because I'm also adding some extra levels. So I will add the 21. So because you see that most likely the prices hit the 20, and on the overbought side I'm also using the 90. Hard to select, but I will in the end. Okay. Okay, now I will add the 81. I would add in the 91, but this is just an example. Now I might wait for my indicator because these are much stronger points to go when the overbought goes to 80 or 90. We gave definition what means overbought and what means oversold. There are no such things. These are constructs. We are just making things up out of zero. Now, for me, chart has already become a bit blurry. I'm not able to trade. So, because we have also many indicators open. Now, let's see what the market will do. Based on 1-hour chart, because we will follow the trend, we would like to take a short position. Now, I say that you shouldn't stick into one time frame. You should play, check all the time frames from the bigger to the smaller one. So this might be the wave, and now this might be prepared for the second wave. And also check how chaotic is the market on previous support and resistances. Indeed, the market did respect these levels, but as you can see, they are not so much predictable. So the prices drops. So at this level, we have some. We are on the opposite side. We have some resistances, which if we check on the previous price history, I'm sure, and this is the chaotic model of trading. You see how the market respects the prices, but someone would agree, would say that it doesn't have to do that. They are just random prices that are depicted on the diagram. But I will keep on the 1-hour chart. I will keep on the 1-hour chart. Now you see that a signal. Let's say let's examine a false signal from the indicator, which we don't know if it's a false one. Now we have the Fibonacci retracement at this level. So we still have the retracement levels that we want. We have the overbought from the RSI. Now from the MACD, we are most likely the retracement is over. So we have too many signals to go short here. The Ichimoku doesn't agree. But if you analyze the indicator a bit better, you will see that it's much thinner at this point. So most likely it will break the prices which of course we don't know. Now, by determining a trade, it's very good. Everything that I've said, 10 out of 10 probably would agree. 9 out of 10. I mean, we are traders, so it doesn't matter. We don't have to agree with everyone. That's why 95% are losing. So at this point, we need to take a decision. So where do you add your short position and where you put your stop loss? You need to be smart and agile. The overbought or the oversold of the indicators doesn't necessarily mean anything. We said what these indicators are measuring. Either it's momentum, either it's an oscillator. I could open also a very popular indicator. Let's go to custom, which is the simple moving average. We are not using the simple one. Give me a minute to adjust my indicators. We will open a simple exponential moving average. And it's here, it's in trend. I have used the 200 period exponential. I use typical prices. We have analyzed that. You can use other weighted medium, open, high, low closes. Not so important. Most likely in most indicators, just to align for these indicators, I will use the typical prices. 200 MA is the most common one. Now you see that the prices are lagging. Now the indicator doesn't work. We say that this is a trend indicator. The moving average is just measuring the moving average of the prices. So most likely now that the market start lagging, the indicator won't work. This is the issues with many indicators, but I'm just giving you an example. Now imagine someone that is new in trading and have plot all these indicators. I could have used much more indicators to make that decisions. Imagine how hard it is to make an assessment of the situation and proceed into a trade. So that's why a technical analysis can be a hindsight. Also, you need to check the fundamentals. Also, you need to check sentiment analysis. What other traders believe that it will happen. You need to check what the big boys are willing to do, because we gave all this information in many of my videos and many of my series. Again, thank you very much. Thank you very much for watching my videos. Again, thank you for your subscriptions and your messages. Trade safe, and I hope I'll see you in the future.